Our Grade A office rents are expected to go up further this year by 3%, despite new supply entering the market. Industry observers say that smaller firms are driving up this demand, even as several larger companies are giving up their prime area offices. Rebecca Metteo tells us more.
Office rents in the CBD reached a 15-year high to almost $11.50 per square foot in the first quarter of this year.
We are seeing a lot more inquiries coming from small and medium-sized occupiers, from the professional and financial services, as well as the consumer goods sector.
Expert says that these SMEs have a high growth potential and are able to beat higher prices for Grade A property space. But large tenants like those that take up over 100,000 square feet have more cost pressures to think about and are cutting back on their spaces.
And that led them to put on hold expansion and relocation plans. And this is particularly obvious or particularly significant for large space occupiers, because you can imagine the relocation and the fit-out cost for such large space occupiers is substantial.
Earlier this year, for instance, Singapore saw a couple of larger companies, including a tech firm, giving up several of its office floors in the prime area. But experts say the market is still looking up as vacancy rate remains stable at around 5%.
Although there might be some bad news with regards to tech giving up space or downsizing, but the thing is that some of the tech space that has been given up was also quickly taken up by the tech themselves again. They retake back the space. The market generally, renewal seems to be the main force that is driving rentals.
With projects like IOI Central Boulevard expected to be completed this year, some 2.4 million square feet of office space will be added island-wide. Still, this increased supply is unlikely to put pressure on rent prices, as demand for Grade A office space is still strong.
Singapore seems to be a magnet for what we call wealth management, and also I also see what we call the growth of Southeast Asia seems to also favor Singapore, because firms tend to like to have Singapore as their regional HQ.
That means rents could be higher for longer, as the market watchers expect the supply of new completions to taper after this year and pick up again only in 2028.